Hey everyone, welcome back to Investment Research. I'm Simo, your equity research analyst, and today, October 24th, 2025, we're talking about SoFi Technologies, ticker SOFI. What a week it's been for this stock. After that sharp drop earlier in the week, SoFi has bounced back with strength. Today it closed at $29.32, up 1.24 or about 4.4% for the day. Now, when I look at that kind of move, especially right before earnings, it tells me investors are still confident in this company's story. You don't see that kind of steady buying if people have lost faith. And the timing here matters. We're just a few days away from SoFi's Q3 earnings report, scheduled for October 28th, and traders are clearly positioning ahead of it. If you remember, earlier this week, SoFi took a big hit, dropping around 7% in a single session, and that really shook some people. But to me, it looked like a textbook correction. You had a stock that's up more than 70% year to date, more than 200% over the past year, so it's natural to see some profit taking. But what matters is how fast it recovered. And here we are 2 days later, and SoFi has already regained a big part of that loss. That kind of resilience shows there's strong demand underneath. When a stock behaves like this, it usually means that investors still believe the growth story is real. Every dip is being treated as a buying opportunity, and that's what we're seeing play out again today. Now, what's keeping people so bullish on SoFi? It comes down to the transformation the company has made. SoFi isn't just a digital lender anymore. It's building a complete financial platform. Checking and savings accounts, investing, credit cards, insurance, and even the back-end technology that powers other financial institutions through Galileo and Technisys. That's what makes SoFi different. It's no longer just a fintech, it's positioning itself as a modern bank built for the digital generation. And that's a powerful narrative, especially at a time when many traditional banks are struggling to attract younger customers. Looking at today's price action, we had strong volume again, over 20 million shares traded. That's not casual trading, that's real activity. And that tells me institutions and larger investors are paying attention. Now, I want to be realistic here. The rally we've seen over the past 2 days doesn't mean SoFi is suddenly free of risks. The stock is still volatile and its valuation remains high. It's currently trading well above the average analyst price target, which sits around $22. That means there's still pressure on the company to deliver perfect results next week. Analysts are expecting revenue around $880 million and earnings per share of 8 cents for Q3. Those are big numbers, and SoFi has to hit them to justify this recent strength. But even more important than that will be guidance. What the company says about the next quarter and 2026. Investors want to know if SoFi can keep growing in a tougher economic environment with rates higher and competition increasing. In my view, what's been helping SoFi stand out is its solid execution. The company has been profitable on a generally accepted accounting principles basis for several quarters now, which is a huge deal in the fintech world. A few years ago, many people doubted that SoFi could reach profitability this soon, but they've done it. And that's exactly what the market wanted to see. Once a company proves it can make money while still growing, it earns a different kind of investor trust, and we're seeing that play out here. Another thing worth mentioning is how strong the financial services segment has become. It's not just lending anymore, checking and savings deposits are growing quickly, and that gives SoFi cheaper capital to lend out. This helps improve margins and makes the entire model more efficient. If you've followed SoFi for a while, you've probably noticed how the company has been slowly shifting from relying on external funding to using its own customer deposits. That's a very smart move because it stabilizes operations and makes SoFi act more like a real bank, not just a fintech startup. Now let's look at the chart side of things. Technically, the stock looks pretty healthy. The $27 area acted as solid support earlier this week, and now the stock has pushed back near the $30 zone. That's right around the recent high from earlier this month. If it breaks above 30.30 and holds, that could trigger another short-term rally. But at the same time, I wouldn't be surprised to see more volatility before earnings. It's very common when expectations are this high. I also want to touch on investor psychology here. A lot of retail investors love SoFi, and that matters. Retail confidence can add momentum during bullish runs. Many small investors see SoFi as a long-term play, a chance to own a piece of what they believe could be the future of digital banking. That's why, even after big drops, the stock tends to bounce back fast. Now, in terms of what's next, all eyes are on October 28th. That earnings report is going to tell us whether this rally has real legs or if it's just pre-earnings optimism. If SoFi beats expectations and raises its outlook, we could easily see the stock retesting the $32 to $34 zone in the short term. But if results come in weaker, or if management sounds cautious, we could see another pullback to the mid-20s. That's just the reality with a high-growth stock. It's never a straight line. But long-term investors are looking beyond the next quarter. They're watching how SoFi continues to grow its customer base, how deposits are trending, and how efficiently the company can expand without relying on expensive debt. And honestly, when I look at the big picture, I think SoFi's future still looks very promising. The company is building something that combines the speed of fintech with the trust and structure of traditional banking. That's exactly the kind of hybrid model that tends to win over time. To wrap it up, today's move is a sign of confidence. SoFi closed at $29.32, up about 4.4%, and the buying pressure tells me investors are positioning for what they expect to be a solid earnings report. It's been a volatile week, but that's part of the story with a fast-growing stock like this. In my opinion, SoFi is still one of the most interesting names in the fintech sector. It's young, ambitious, and already profitable, which puts it in a rare category. But investors should also stay realistic. Growth stocks like this can swing sharply both ways around earnings. That's why I always say stay informed, stay calm, and focus on the long-term fundamentals, not the short-term noise. I'm Simo from Investment Research. Thanks for watching and following along with this analysis. I'll be back with you right after the earnings release to break down the numbers and share what they mean for investors. Take care, and I'll see you in the next one.